Big news from Washington is making waves across the country, and it could have a lasting impact on the American workforce for years to come. A new policy has just been announced that could reshape not only how companies hire, but also who gets to build the future of American innovation. On September 19, 2025, the Trump administration revealed a sweeping change, a massive new fee for the H-1B work visa program, which is used by thousands of skilled workers every year. The fee, an eye-popping $100,000 per worker per year, an amount that could put this visa out of reach for many companies and talented professionals. The H-1B visa has long been a lifeline for American companies, especially in fields like technology, engineering, and science, allowing them to bring in highly skilled workers from around the globe. This sudden and dramatic change sent shockwaves through the business world, with many leaders scrambling to understand what it means for their teams and their future projects. The new rules are set to take effect at midnight on September 20th, giving companies and workers almost no time to prepare or adjust their plans. For decades, the H-1B program has helped America attract top global talent for critical jobs in science, technology, and engineering, fields that drive the nation's progress and competitiveness. Now, with this unprecedented fee, the entire system faces its biggest test yet, and the future of many skilled workers in the U.S. hangs in the balance. Supporters of the fee argue that it will protect American jobs, claiming that some companies have used the H-1B program to hire cheaper foreign labor instead of investing in U.S. workers. But critics warn that such a steep fee could drive away the world's best minds, making it harder for America to stay ahead in innovation and global competition. The debate is fierce and emotional. Is this really about protecting American jobs? Or is it about closing the door to the global talent that has fueled so much of America's success? In this episode, we'll break down how the H-1B program works, who depends on it, and what this new fee could mean for the future of American business and innovation. We'll hear directly from companies now facing tough choices about whether they can afford to keep their international talent or if they'll have to change course. And we'll talk to legal and academic experts who are questioning not just the policy's legality, but also whether it's a wise move for America's future. This is more than just a policy change. It's a turning point that could redefine America's economy, its workforce, and even its national identity. The stakes are incredibly high for companies, workers, and the country's future direction. Every decision made now will echo for years to come. The debate over this fee is really a debate about what kind of economy and what kind of country America wants to be. Let's dive in and explore what's at stake. So what exactly is the H-1B visa that's at the heart of so many heated debates about immigration and the American workforce? The H-1B is a non-immigrant visa that allows U.S. companies to temporarily hire highly skilled foreign workers in specialty occupations. Think software developers, engineers, scientists, and doctors. These are roles that require advanced knowledge and expertise, often in fields where the U.S. faces a shortage of qualified professionals. To even be eligible, workers must have at least a bachelor's degree or its equivalent in a specific relevant field. Many H-1B holders have advanced degrees and years of experience, making them valuable assets to American employers. The program is designed to help companies fill jobs when they can't find enough qualified Americans, especially in fast-growing industries like technology, healthcare, and engineering. It's a way to bridge the talent gap and keep U.S. businesses competitive. But there's a limit. Each year, the government sets a cap, 65,000 new H-1B visas, plus an extra 20,000 for those with U.S. master's degrees or higher. This cap hasn't changed in decades, even as demand has soared. Because demand far exceeds supply, a random lottery now decides who gets a shot at these coveted spots. Thousands of hopeful applicants are left out every year. If selected, the H-1B visa allows workers to stay in the U.S. for up to 6 years, often with the possibility of applying for permanent residency later. Tech companies are by far the biggest users of the H-1B program, relying on it to recruit top talent from around the globe and drive innovation in Silicon Valley and beyond. In fact, many founders and key employees of major U.S. tech firms first came to America on H-1B visas. Their contributions have helped build some of the world's most successful companies. These workers don't just fill jobs, they pay taxes, spend money in local communities, and help create even more employment opportunities for Americans. But critics argue that some companies misuse the program, replacing American workers with cheaper foreign labor, especially in IT outsourcing. This has led to stories of layoffs and frustration among U.S. professionals. The result? A long-running debate. Does the H-1B program fill critical skill gaps and fuel growth, or does it suppress wages and job opportunities for U.S. workers? The introduction of a new higher fee is just the latest flashpoint in this ongoing controversy, sparking fresh arguments on both sides. The stakes are high. At risk is America's ability to attract and retain the world's best and brightest talent, which is crucial for economic growth and global competitiveness. The H-1B program stands at a crossroads, with its future and the future of American innovation hanging in the balance. What happens next will help determine whether the U.S. remains a magnet for global talent and a leader in innovation for generations to come. Let's break down the new fee. The Trump administration now requires companies to pay $100,000 per H-1B worker every year. For a 3-year visa, that's $300,000 per employee. For 6 years, $600,000. This is a huge jump from the old fees, which were just a few $1,000s. The rule takes effect with almost no warning, leaving companies scrambling. The fee is more than just a processing cost. It's a major financial barrier. It's designed to make hiring foreign talent much more expensive, forcing companies to rethink their strategies. Details are still unclear. How will the fee be collected? Will there be exemptions for small businesses or nonprofits? The sudden change has left companies and immigration lawyers racing to adapt. The bottom line, this fee could fundamentally change who gets to work in America. The uncertainty is just beginning. Who's hit hardest by the new fee? The answer is more complex than you might think. Tech giants like Amazon, Microsoft, and Meta employ thousands of H-1B workers, making them some of the largest sponsors of international talent in the U.S. technology sector. For these companies, the new fee could mean billions in extra costs over time, potentially forcing them to rethink their hiring strategies and global workforce planning. IT consulting and outsourcing firms, Infosys, Wipro, Cognizant, also rely heavily on H-1B talent, often serving as a bridge between global expertise and American businesses. Their stock prices dropped immediately after the announcement, reflecting investor fears about shrinking profit margins and future growth. India and China, the top sources of H-1B workers, will feel the impact too. Families and communities in these countries depend on opportunities in the U.S. for economic mobility and remittances. For many, the American dream just got a lot more expensive, and for some, it may now be out of reach entirely. Smaller businesses and startups already operating on tight budgets may be shut out entirely from hiring the talent they need to compete and grow. Unlike big corporations, they can't afford a $100,000 fee to hire a single specialist, making it nearly impossible to access global expertise. This could stifle innovation, slow down new business creation, and give even more power to the largest companies that can absorb the costs. The fee risks closing the door to a generation of global talent, making it harder for skilled professionals to contribute to America's growth story. It could also reshape the economies of countries that send workers to the U.S., affecting families, businesses, and even national growth. The ripple effects will be felt far beyond Silicon Valley, touching industries and communities around the world. The new policy could fundamentally change who gets to build America's future, shaping the country's workforce for years to come. The consequences are just starting to unfold, and the full impact may not be known for years. Why this dramatic fee? The administration says it's about putting American workers first, part of the America First agenda. They argue the H-1B program has been used to undercut U.S. wages and replace Americans with cheaper labor. The high fee is meant to reverse that incentive, making companies think twice before hiring from abroad. Commerce Secretary Howard Lutnick says if a company truly needs unique foreign talent, the fee is an investment. If not, it's a deterrent. The administration sees this as a market-based fix to a market failure. It's also a signal. The era of easy, low-cost foreign skilled labor is over. The message is clear: hire American or pay a steep price. The backlash was immediate. Tech leaders warn the fee will drive away the world's best minds, threatening America's innovation edge. Economists say it could tax away U.S. competitiveness, pushing talent to friendlier countries like Canada or Germany. Legal experts question whether the administration even has the authority to impose such a massive fee, predicting court battles ahead. Critics argue H-1B workers fill roles Americans can't, and often start new businesses that create jobs. More than half of America's billion-dollar startups were founded by immigrants. By blocking this talent, critics say, the U.S. risks losing future job creators. The debate is about more than visas. It's about America's place in the world. The stakes couldn't be higher. Companies reacted fast. Tech giants urged H-1B employees abroad to rush back before the deadline, fearing they'd be locked out under the new rules. International travel plans were canceled, creating anxiety for thousands of workers and families. The business community's alarm contrasted sharply with the administration's claim that all the big companies are on board. Many firms are now rethinking their hiring and even considering moving jobs overseas. The policy meant to keep jobs in America could end up sending them abroad. The scramble is just beginning. At the same time, the administration unveiled a new Gold Card program. For a flat $1 million, wealthy individuals can buy their way to U.S. permanent residency. Unlike the H-1B, this path is based on wealth, not skills. Critics say this creates a two-tiered system, one for the rich, another for the talented. The message? America now values money over merit. This shift could change who comes to the U.S., favoring investors over scientists and engineers. The Gold Card highlights a dramatic change in immigration philosophy. Is the American dream now for sale? The contrast with the H-1B fee is stark. The future of U.S. immigration may depend on which path the country chooses. The $100,000 H-1B fee is more than a policy tweak. It could reshape America's economy and global standing. Companies must choose pay up, hire domestically, or move jobs abroad. The risk? Higher costs, lost innovation, and jobs leaving the U.S. America's status as a magnet for global talent is at stake. Legal battles over the fee's legitimacy are likely, with big implications for future immigration policy. The real question, will America close its doors or stay open to the world's best and brightest? The answer will define the nation's future for decades. The story is just beginning.